Should I invest in gold right now? Welcome back to my channel, the channel of personal finance and money matters. Remember to subscribe to my channel and turn on the notification bell if you'd like to watch more videos like this. Let's begin. Hi, my name is Louis, your financial educator. Should I invest in gold right now? It is a $1 million question in investment. Before knowing should you invest in gold right now, you have to understand, is gold a good investment? Gold has been an essential part of human culture since the beginning of recorded history. Around 3100 BC, the first Egyptian dynasty regarded this precious metal as the highest medium of exchange. The gold standard served as a global basis of money until 1971. It's no longer the primary currency, but gold can be a solid investment for many reasons. Here's what you need to know if you have ever considered investing in the world's most precious metal. Is investing in gold risky? Gold and risk definitely belong to the same sentence. Simply put, the answer to is gold risky is a conditional yes. You must consider the degree of risk and how you can control it. As a long investment, gold is very susceptible to the whims of supply and demand. Its price can be very volatile, especially during upswings in the stock market. It's easy to conclude that investing in gold is a risky business. On the other hand, gold prices tend to rise when other securities decline. This makes it an attractive asset if you are after a diversified investment strategy. Plus, it provides protection against a weak US dollar. Let's dive into the advantages and disadvantages of gold investments. Advantages of gold investments. Throughout centuries of change, gold continues to be a popular investment. Here are some reasons why you should consider investing in gold. Hedge against inflation. Inflation happens when the rise in prices on the cost of living decreases the dollar's buying power. Any weakening of the dollar increases the price of gold. During hard times due to inflation, gold becomes a more sound investment than cash. Diversification. Risk management is essential in developing a strong investment portfolio. Wise investors add securities with a negative correlation to their portfolios. Securities with a high negative correlation move in completely opposite directions. With its negative correlation to the stock market and currency values, gold provides a vital way to lower your overall investment risk. Liquidity. Cash is king, but gold runs a close second. Owners of gold can easily convert it to cash all over the planet. Other than actual cash, it has no peers. Hard times insurance. Gold holds its value when financial hard times hit, including during geopolitical unrest. People tend to seek shelter when world powers collide. During these events, gold prices generally outperform other securities. Disadvantages of gold investments. Before you decide to invest in gold, be aware of its shortcomings. These factors can come in handy when determining the ratio of gold to other investments in your portfolio. Consider these disadvantages. No passive income. Gold's only return occurs when the price rises and you decide to sell. It doesn't generate any passive income through interest or dividends. Beware of the bubble. Hard economic times cause many people to invest in gold. Panicking investors can cause gold prices to soar to the point of being overpriced. Once the price corrects itself, you can lose a lot of value. Dismal historical returns. Gold returns historically lag behind stocks and bonds investment, and bonds returns. Over 200 years, a stock investor would have earned $5.6 billion from a 10,000 investment in gold. A bond investor would have received $8 million for the same investment. A gold investor would only have earned $26,000. As a standalone investment, gold can be a terrible performer. Choose gold to complement your portfolio. Investing in gold is risky, but the risks are manageable. Gold can help you manage the overall risk in your portfolio. This is the double-edged sword. As a sole investment, it offers low long-term returns and possible losses. It can be a vital asset to your investment strategy when used correctly. Instead of asking, should I invest in gold right now, you can ask, how much should I allocate gold in my overall portfolio? Because gold is an unproductive asset. Many experts suggest limiting the amount of gold you include in your portfolio. One suggestion is to add gold to no more than 5 to 8% of your portfolio. Here's the bull and bear cases for gold investment. The bull case for gold is that it's considered a stable hedge against inflation. If inflation spikes, gold prices will too, and gold investors will be protected from the fallout. For example, gold prices rallied from under $700 per ounce in late 2008 to as high as $1,923.70 in mid-2011. The bear case for gold is well explained by the legendary investor Warren Buffett. Unlike stocks or bonds that produce earnings, generate interest or pay dividends, gold has very little actual utility. Gold will never produce anything. It doesn't do anything but sit there and look at you, Buffett once said. To make matters worse, the world's supply of gold is constantly growing. Although there is a finite amount of gold on the planet, the amount of gold available to buy and sell is increasing by more than 3,000 metric tons per year. The final case against gold is its historical performance. Since the beginning of 1990, the price of gold is up just 372.1% compared to a more than 1,700% total return from the S&P 500 in that time. So the choice is yours. However, experts suggest that to include a small percentage in your overall portfolio as a hedging tool. Thanks for watching. Hit the like button if you like this video and subscribe to my channel as well. See you in the next video.